If you want to own safe stocks that pay dividends and double them, I have an easy process and a list of stocks that you can use to make easy income. I respect your time, so let me first tell you what this is, and then if you want to listen to how I'm doing it, then you can listen to the rest of the video. So I'm selling covered calls on high-paying dividend stocks. That's all I'm doing. I'm finding stocks that have a good dividend, ideally a growing dividend, and I'm selling covered calls around a 40 delta. So if you want, that's the process system. Go ahead and take it. Now, if you want to listen to my list of stocks and how I'm doing everything, let's go over into my research right now. I'm going to be sharing with you some examples as well as some ETFs and a list of stocks that I really like. All right, so I'm looking at my notes right now. So look, the first thing is this strategy provides income. All right, so obviously dividends are really good for, retirement. Dividends are consistent income, right? It's like 3 or 4%. However, that's just not that attractive. If you want more income, you pick dividend stocks and then you sell covered calls on them in lots of 100. By the way, here's a list of stocks just so I don't, again, waste your time. AVJO, JP Morgan, ExxonMobil, Procter & Gamble, Johnson & Johnson, Home Depot, AbbVie, Walmart. I'll also be talking about Apple, NVIDIA in this video, and then I'm going to give you a list of growing dividend payers. So dividends that continuously rise year over year. Okay, so that's going to be another one. By the way, guys, these stocks, to be honest with you, I am buying quite a bit of these, like, bicep over tricep. I'm buying these stocks. I think they're fantastic stocks. Just because they're boring stocks doesn't mean that they don't make money. It doesn't mean that the double dividend strategy isn't fantastic. Now, all right, let's go into the rest of this video. So this is the perfect strategy for retirees who want predictable income. All right, so if you want a predictable income and you want your portfolio to be safer than the stock market, basically like SPY, but it's going to be a dividend paying SPY, much higher dividend paying than SPY, then this is a really reliable strategy. This is something that I've seen actually at Goldman Sachs. When I was working there, I did see an article. The article was called Turning Stocks into Bonds. So bonds, obviously, I don't cover on this channel, but bonds are essentially, they're fixed income sources, right? You just buy a bond and it just pays you a fixed income. Now you can do something very similar by having high quality stocks, and you can beat bonds by 2 or 3x by having dividend paying stocks and selling covered calls. I would recommend on a quarterly basis, all right? Now, I know a lot of guys that are in my community, they like weekly income. I like personally monthly income, but for this double dividend strategy, I would recommend going quarterly because it's already a slow, safe, dividend paying stock. You don't need to trade monthly options on it. You can just sell quarterly options. I'm going to show you an example. Of course, I just want to go through the details, the mindset, so you know everything in this video, right? Not only are you collecting dividends from high quality stocks, but you're also selling covered calls to add premium income, ensuring that your portfolio basically works harder for you, even in retirement. So a lot of folks in retirement, you don't want to have an actively managed portfolio. It takes time, it takes energy, and there is higher risk, obviously, you're managing your money because it has higher risk. Let's be honest. Financial advisors will sell you this BS story that you need to manage your money. If you're in the right positions, you don't really need to manage anything. Imagine having a real estate property where your tenants have paid you for 15 years in a row. Do you really need to manage anything? No. It's been 15 years. Your tenants are paying you every single month $5,000, let's say, for a really premium high-end property in Miami. Probably you don't need to really manage that super closely, right? So managing is for people that suck at trading. If you don't suck at trading, you have less to manage. Just pretty obvious there, right? But that's something that people don't think about. So now, when it comes to doubling your dividend, what you want to do is going to go for the 40 delta option. So let me just go into AVJO real quick. So yeah, let's go into AVJO. By the way, my portfolio is almost at $3.4 million. Like, what insane. How insane is that? Like, week after week, you guys see me growing my portfolio transparently here on YouTube. We're up $21,000 pre-market right now. Like, insane. We're doing so well. And I'm happy that I'm the only transparent guy. I'm showing you my wins and my losses, guys. I'm showing you everything. I'm not shy. I'm not shy to show my wins and losses. When I have tough times, I admit it. But right now, times are beautiful. And guys, I do one-on-one coaching now. So I have a Discord, but I'm not selling a Discord. I'm not going for the masses. I'm going for one-on-one coaching. Working individually with folks, which is very tough because we have no spots right now. But when we have spots, click the link in the description. Right now, it's busy. So Broadcom, okay, $173 per share. Now look, I don't currently have any shares. My portfolio is full. I have a lot of high quality stocks. I have NVIDIA, guys. I have just lots of high quality companies that my money is busy with, okay? That's a good thing. I like AVGO, but my money's busy at the moment, so I can't really do a whole lot. However, I'm gonna show you if the market was open. Let me get my computer here. And if the market was open, let me back up here, give you guys a good view of the biceps and the triceps and the money here. So that's what matters, guys. We want to make more money safely, okay? It's very clear, because what you want to do in finance in general, okay, a lot of people get this wrong. The whole point of doubling your dividend is that you want safe income. You want safe, passive, consistent income. That's what my whole channel is about. Safe, passive, consistent income. You know, that's my slogan. And that's because that's what I've been doing for a very long time. I've been traveling the world. I've been able to make consistent income. I am not interested in making $5,000 one day and then losing $2,000 the next. I have zero interest in that. What I'm trying to do is, I've hit all my goals, but my original goal was just to make $10,000 a month. And then I bumped it up to $20,000 a month. And obviously my portfolio is doing a lot more than that, but that is a habit that I have formed over many years to just be consistently selling options, okay? Look, if you want to double dividend, Broadcom, you buy 100 shares and then you go to trade AVGO options, and I would simply go to sell call option. Again, I did say quarterly is the best. You could go for monthly options. You can go for every 2-week options. You do you, but I'm telling you right now, if you want less management, if you want passive income, just go for 3 months. There's nothing wrong with that. Nothing wrong with that at all. All right, you can even go 4 months. So look, January 17, 2025 on AVGO at 173, I would go to, let's say 180, okay? The delta here is very high. It's kind of crazy. It's actually kind of good, because AVGO is at 173, this covered call is at 180, which gives you that upside, plus the premium is huge. $13, are you kidding me? That's like a 7% return on the 100 shares. So if you buy 100 shares, you're going to be putting up $17,000 in capital, right? You have 100 shares. Now, most people just hold 100 shares and not much happens. But if you're selling covered calls, beautiful, you're collecting income. So $1,300 on 17,000 is getting to that 8% or so, right? I'm kind of doing the math in my head, but this is a very high return. Let me go over the other, I have 10 stocks on this list, by the way. So first of all, AVGO, the reason why I like it is it has high volatility, which means high premiums, okay? This is the first stock on my list for a reason, because it is a little bit more exciting to have AVGO due to higher volatility. Like you can see here, the volatility is 39, which I would say isn't massively high, but it's also very good, right? And the volume is very good at 291. So, and the delta right here just tells you that a lot of people are bullish on AVGO. So even an out of the money option is going for 50 delta. So Broadcom is known for technological innovation, which obviously causes a lot of price swings, okay? This is a top S&P 500 company, makes it a blue chip stock, very safe. That is why I like it for many reasons. Now, guys, you can also go for a little bit closer to the money. You can go for a 175 covered call. You can go for October 18, okay? I said monthly options are completely fine. Go for monthly options. I think nothing wrong with that, all right? So look, this is $1,300 in January, but you can also go for October 18. Now, I've said this many times. The third Friday of every month is the best option to trade. It is a traditional expiration. Don't ask me why it's a traditional expiration. I don't know, but the third Friday of every month is the best expiration, okay? So October 18, you can easily do this at 175. You can see here how in 24 days, it's $600 on $17,000. So that's essentially a 3% return in 24 days with a little bit of upside, right? Because from 173 to 175, you have like $1.24 worth of upside. So in total, $7 on 17, which is, it's really $700 on 17,000. That's a fantastic return. All right, the next stock I want to get into is going to be JP Morgan. So I'm going to show you JP Morgan right now. Guys, with the lowering of interest rates, by the way, more businesses are going to be borrowing money. And because they're going to be borrowing money, that's going to mean more fees for the banks. The banks are just intermediaries. And being an intermediary is very profitable. It's very easy for for a bank just to rake in those fees, right? Unfortunately, not unfortunately, that's good for the economy and the business, but I don't really like paying all the fees myself. But, you know, I pay them. These banks make good fees. They borrow money for low rates and they lend them out. That's how banks work, right? So the banking sector is very stable. Obviously, I worked for Goldman Sachs. That was a phenomenal experience onto the inside of how finance works, how trading works. Majority of my time was spent just doing option research because that's been my hobby, my interest since I was like 19 years old. And it's funny, not to ramble, I'm getting to the point here, but the way I got into option trading was because I enjoyed playing poker, and poker and option trading are very similar because decision-making skills there are similar. Look, JP Morgan, this is a cornerstone of the banking industry, right? We got the phenomenal CEO, and JP Morgan stock is less likely to have extreme moves, right? So if you take a look at 3-month performance right here, this is very stable performance. This is what makes this a good double dividend stock. You own the stock. JP Morgan is currently paying a 2% annual yield, which is nothing to write home about, nothing crazy. However, it becomes quote unquote crazy, right, when you start selling covered calls. when you start selling covered calls, you can turn this 2% dividend, and this isn't like even double. You can literally every quarter make 2-3%. So you're really like 5xing the dividend on JP Morgan, and you can easily collect. Let's see how much you can collect. So currently it's at $211. Here's the good news. We don't know what the stock market is going to do, right? In the short term, right, we never know. In the long term, we know high quality companies are going to rise in value. That's a very simple equation. Now, for a short term, we don't know, but by selling covered calls, we actually give ourselves a margin of safety, which is something that Warren Buffett talks about. I'm going to the January 17 here. Warren Buffett is obviously someone I've studied. You can't go to finance school. You can't get an economics degree and work on Wall Street without studying Warren Buffett. I read all his books, okay? All his books I read. He talks about the simple concept of margin of safety. What that means is you want to buy a stock for at least roughly 15% margin of safety. Meaning, if a stock is $100 in the stock market and you think it's worth $100, you would want to buy that stock at $85. Makes logical sense, right? You want a discount. We all like discounts. However, we don't know what that value is, right? Unless you sit down and do the research, you can't trust nobody at all, really. At the end of the day, you must do your own research into what you think the stock is worth. Don't listen to other people. There's a reason why Warren Buffett does not live in New York City, because there's too many people with opinions, okay? Opinions are good and very bad at the same time, okay? You want to make sure you have a qualified source. Most people are not qualified, and the qualified people are not on YouTube for the most part, okay? So do your research, but if you don't know the perfect price to buy a stock, here's the good news. Selling covered calls gives you a margin of safety. Let's say you don't know what JP Morgan is worth, if it's a fair price to pay $211. To be honest, I don't know right now if it's a good price to pay $211. However, if I'm going to sell an option right at the money, right, which is, it's at $211. I'm going to show you a little bit of a unique example right now. If I were to sell an in the money option at 210, okay, the stock's at 211, I'm going in the money at 210. Why does this make sense? Because first of all, I'm collecting $12, and my break even is, it says 222, but I want you to think about it a little bit differently. If you buy 100 shares right now and you get $12, it's $211 average cost minus, subtract out the premium that you get paid of $12. Now we're at a per share average cost of $199. You tell me, do you have to be a genius to do this? You tell me, do you have to know if JP Morgan is a phenomenal deal at 211? No, because now you've collected premium and you can see that the stock is below 200 average cost. So whatever the stock will be worth in the next 30 days, it's probably, let me expand the option here, probably, more than likely, okay, it's not going to be below 200. It can be, but if it is, you have a margin of safety. So you don't have to be a genius. You don't have to know where the stock market's going. This double dividend strategy right here gets you $12. Anyways, I've spent too much time on JP Morgan. I'm rambling about a whole bunch of stuff here. Let me go to the next stock, ExxonMobil. All right, XOM. All right, we're gonna look at XOM. I like oil and gas, guys. I'm giving you all the free stuff on YouTube, guys. Right now, I'm fully booked with my coaching. So I'm just giving you free advice. I want you to do better. I want you guys to have more results in trading. This stuff is super powerful. And I'm not a financial advisor or anything like that. I'm just telling you what I would be doing if I wanted safe passive income and I wasn't trying to hit it out the park, okay? You can hit it out the park with one of my picks, NVIDIA. That's number one. If you want the highest income, go for NVIDIA. NVIDIA, Tesla has been on an absolute tear recently. Just go for that. This is gonna be a little bit more safer. Although ExxonMobil, if you look at the 3-month results, 6%. Again, this looks like JP Morgan. It literally looks the same. The chart is different, but the return is about the same. So imagine building yourself a portfolio of 10 companies that I'm gonna be covering in this video that are more or less getting you a 3-month return of 5%, 6%. Then you have covered calls making another 2-3% for 3 months. Then you have a dividend payment of 0.5%. What's ExxonMobil's dividend? It's 3.24. So in 3 months, in a quarter, it would be about 0.75 basis points, or about actually 0.81 basis points, because 0.81 is 1/4 of 3.24. So yeah, I was pretty good at math. I did a lot of math stuff. I have an analytics degree, so anyways, it doesn't take a genius to do that, but anyway, I don't even know. Cracking myself up sometimes how I go off topic. Let's stick to the point. ExxonMobil, great company. You buy 100 shares, you sell a covered call. I would straight up go for 40 delta or very high delta. Go for, you can see the bottom here was 109. It's at 118. Go for a 118. Nothing wrong with that. Just go for 118, covered call. ExxonMobil, for me, oil prices are very stable and it's a good way to fight inflation. We got got liars in the Senate or whatever, guys. The inflation is BS. The inflation is actually much higher. I made a recent video how it's too funny. It's too funny. They'll tell us inflation isn't that high, but the CPI, the basket of stocks that they use, they'll switch out. Guys, they'll switch out beef for chicken because it's a substitute. Okay, I have an economics degree. In the CPI, how they report inflation, they look at a basket of goods. They look at transportation, they look at education, they look at food, they look at housing, right? They will try to switch that basket up and give it different weightings. Okay, so they'll take beef, right, which has grown by, let's say, 18% in a year, and chicken has grown by 3%. They'll switch out beef for chicken. And they'll say, hey, you know, the inflation's not that high. It's all right. You know, people go from the more expensive goods to the cheaper goods when inflation is high, right? It's a substitute. It's called a substitute, right? They substitute one for the other. Guys, I don't know about you, but I want to eat my steak. I don't want to eat chicken if I don't want to eat chicken. Why are they forcing me in the CPI to go from beef to chicken? It makes no sense. So be careful. You guys need to make more money because inflation is high. All right, and when we look at something like ExxonMobil, the commodity of oil and gas is going to keep doing well. All right, oil and gas is a good commodity that will hold its price. Same with gold, right? Same with gold, oil and gas. You need something like a Chevron, like an ExxonMobil. Go for the 40 Delta and collect really good income. And this is also a perfect candidate to sell covered calls because the stock is less likely to break through the covered call strike. Because yeah, it's bullish, but it's not hugely bullish, right? The momentum isn't that strong in oil and gas. So it's a very slow and steady return. Again, plus dividends, plus covered calls. Easy money, right? Easy money. Next one, and I think you guys get the point. I'm going to go a little bit faster now. Procter & Gamble, consumer staples are slow movers, which makes it very powerful for the double dividend strategy. Procter & Gamble is a stable company with slower price growth. It's obviously in the consumer staples sector. Guys, I'm a big fan of tech sector. Obviously, I cover tech all the time. I was a software analyst on Wall Street. I like brands and consumer discretionary. There's a difference, all right? There's consumer discretionary, which is going to be your Starbucks, your Nike, stuff like that. The brands, more of the personal brands. I would argue Apple could go in there, although Apple is technology, right? And then you have your consumer staples, your, the detergent, the toilet cleaner, the stuff for your, the toothpaste for your teeth. This stuff is what human beings have to use, whether they got money, they don't have money, whether you're in America, whether you're in Tokyo, whether you're in the streets of Bangladesh or you're in Calcutta, India. It doesn't matter. People are going to be probably brushing their teeth, regardless of income, right? So these are the companies that make money. Next stock on the list is going to be Johnson & Johnson. Again, healthcare, consumer staple. This is a defensive play, guys. As the market is somewhat expensive, I'm having a difficult time in my live coaching sessions in Discord right now because I don't have a whole lot of opportunities to trade. I'm already fully invested. And as the stocks reach their peaks and their highs, I don't have too much to invest. I don't. So I'm looking at more defensive plays. I was working with one of my one-on-one students, Phil, and he wanted to set up a retirement for his grandkids. And I told him, look, you have a multi-six-figure portfolio. He has 5 grandchildren, so Phil wants to set up $2,500 for each of his 5 grandchildren. I said, look, I think you just need to have a little bit of defensive in your portfolio because if you want to save passive income, which is through dividends, through covered calls, you want to just set up in some defensive plays. So we gave him Johnson & Johnson. And if you take a look at Johnson & Johnson, let me go to J&J, you'll see that the return is very stable. The dividends are very high. So let me go to year to date on this one. The year to date is 4%. So this is very stable. Obviously, Phil wants to just set up just safe income for his grandchildren. He doesn't want any variability because basically here's what he said. He doesn't want to have to set his grandkids up for life. He's not that rich. He just has multiple 6 figures and he wants enough income for his grandchildren to not worry about their basic needs. You know what I mean? He's not going to pay for college. He doesn't have enough money for their college education, but he wants to set up something so his grandkids are, less stressed about their finances and stuff like that. So I said, look, JP Morgan's fantastic and Johnson & Johnson's also fantastic because we have a 3% dividend yield, and you can actually set up even every 6 months covered calls. So let me go to 6 months covered calls. We're making a long video, guys, because I have a lot of ideas here. All right, so guys, I'm gonna go 200 days out in April 2025. Look, we can go for the 165 covered call. This isn't banking your money like crazy. This is not like crazy income, but look, $8 is basically a 5% return. you get the JP Morgan dividend, which is going to be 1.5%. So that's 6.5%, and you have a little bit of upside. You have $1.78 of upside. So you can make 7-8% return on the safest play ever. Like literally, this is a bond. Like it's just going up. Now let's go into more of my other plays that are going to give you a little bit more income. All right. I want to go over Walmart. So Walmart, let me go into my portfolio, guys. I killed it with Walmart. I killed it. All right. Let me go to Walmart. If I click into Walmart right here, you will notice that I am up 56% on Walmart. 56%. Guys, who said that you need high risk growth stocks to make money? You don't. You can go for the safe, boring stocks like Walmart, and you can literally make, as you see on my screen, 56%, $175,000. I am holding Walmart for less than 1 year. Yes, I have a sizable position. However, it is pretty much multiple six figures on multiple six figures. The return is high. I caught Walmart at $51.97 per share, and I'm very proud of this play because it demonstrates how you can have non-volatile stocks go up a lot if you buy for the correct price. Okay, it took a long time. I did a lot of research, and I realized that the digital revenues on Walmart are very good. So I'm doing covered calls. I have an 81 covered call. It just broke through my covered call here. So I'm running essentially the double dividend strategy myself, and I've made 56% in a year on the double dividend strategy. I will admit I did not always have covered calls on Walmart. I did let these shares run because I personally like the momentum on Walmart, and I allowed it to run a little bit higher. All right. I wanted to cover dividend growth. So there's so many things I want to teach in this video. I'm so pumped up, guys. I'm so pumped up to teach you and level you up. Look, there's an ETF, VDIGX. The reason why I want to look at it is because the performance is very stable. Over 10 years, it's 11%, which is the market return. However, if you were to do this plus covered calls, you can probably get closer. You can get more income for sure. So let me go into the holdings here because I want to point something out. Look, consumer discretionary, here we have right here. It's 10% of the fund. Consumer staples, financials, healthcare. It's pretty balanced, right? Infotech is 15.5. Look, you can also run double dividends on the higher growth stocks. Microsoft, Apple, United Health. We have Honeywell. We have McDonald's, Visa, Texas Instruments. I would also be running on these equities right here. All right. Now, I guess the best idea that I have, just period, point blank, is going to be NVIDIA. NVIDIA is going to be the highest double dividend strategy, although I'll be honest with you, this is a little bit sneaky. This is sneaky of me. I'm being sneaky right now because NVIDIA has a dividend, but it's 0.02%. So this is technically a double dividend strategy. This is technically 100x. This is a 100x dividend strategy. I'm not going to clickbait with that. Imagine I clickbaited on my title, 100x your dividends. It would be true. It would be true though, because the dividend here is so small. I can just joke like that, but I'm not going to joke. I don't want to clickbait. I'm going to be honest. The dividend here is very low, so I'm being sneaky. Here you can 100x your dividend, obviously. This is just a regular covered call. It's just funny because NVIDIA pays like, I don't even know. Why did they even introduce a dividend that is so low? I think they just wanted to say we're a dividend paying stock, but it's like if I said I donate to charity and I donated 5 cents. I donate. My mom, she helps with the shelter with animals, and I donate, but it's definitely more than 5 cents. All right. I think it's funny when a millionaire or someone rich donates $1. They're like, oh, I donate. It's like, dude, you donate, but let's donate a little bit something meaningful. Same thing with NVIDIA. It's not a meaningful dividend, but straight up, I'm making really good money selling puts. Obviously, the title of this video is more so the double dividend strategy and related to covered calls. So I would sell covered calls on NVIDIA. I would easily sell covered calls on NVIDIA. I just already have a lot of NVIDIA shares in both my portfolios. So on NVIDIA, look, the options are bombs. They're bombs, guys. I would be buying NVIDIA hand over fist, bicep over tricep. This stock is my number one pick. It's the number one stock that I would say you got to be invested in. It's a really good stock. Growing, everything is on point. I've already made videos on NVIDIA, so check out this channel if you want more NVIDIA videos. I've already done my full analysis. Here, just getting to the point, you got a 10% return in a little over 3.5 months, get 10% return every quarter. That's 40% return per year on a high quality company. You have $3 of upside. This is the highest growth pick that I have in this video. All right, obviously NVIDIA, AI and GPU dominance. All right, NVIDIA is a leader in the semiconductor industry, particularly in GPUs, AI, gaming, data centers, autonomous vehicles. This is the strongest intermediary. I don't know if they're fully intermediary. I don't know if I can say NVIDIA is fully intermediary, but this company provides chips that are essential. I'm going to say it's essential to life because I know a lot of healthcare companies that save lives, also NVIDIA. Yeah, its rapid growth is tied to exponential rise in demand for AI and technology and data processing, and it's a key player. So going to do covered calls on NVIDIA is just the biggest no-brainer ever. And if you want to manage your portfolio properly, you want to have higher risk stocks too. Even if you're already retired, even if you're like, hey, I'm good, I have enough income, why not make some more? Why not make some more income and have some exposure into a higher volatility, higher income play like NVIDIA? So the simple answer is, I would, if you can't afford it, I would dollar cost average into the high quality companies and higher growth companies like NVIDIA, like Apple. I have a whole lot of Apple. Guys, you missed the boat. You missed the boat. You guys all clicking videos on just Palantir and you're watching every YouTuber talk about Palantir for the 50th time while I'm here making $328,000 on Apple. I called Apple from the very beginning. If you're invested in another company, well, Palantir did very well, so I can't talk trash. I have Palantir. But I'm just saying, too many of you guys are focused on the wrong stocks. If you're not getting returns that are like 5 figures or 6 figures and you have a decent sized portfolio, you're not listening to the right videos, you're not taking the right action. Having simple stocks like Apple, doing double dividends, I don't currently have covered calls on Apple. They just expired actually on Friday. On Friday, like last Friday, they expired and I haven't sold any covered calls yet, but I will be. I'll be selling some covered calls and making a lot of money. Basically just selling covered calls and consistently just collecting income on high quality companies. Guys, I don't even know what else to tell you. My one-on-one coaching is full. I'm just telling you all this free stuff that you must copy, you must use for yourself. This is so simple. You don't need to pay anyone. You don't need to smash any like buttons. I would appreciate it if you subscribe. That would be fantastic because you can see my videos, but you don't need to buy nothing. You don't need to do anything. Just do this one thing and you'll make income. And you don't even need to watch 100 videos on YouTube. I'm just telling you the truth. I want you guys to level up your lives financially, your personal life, and on all areas, because that's what I love doing. I'm a coach for a reason. I love self-improvement, and I love just helping other people grow and improve, all right? So you don't have to do nothing. Don't click no links on this video. I don't need anything. I want you to make more money, for you to be happy, and for us to just continue on this journey. I'm blessed. I'm happy. I love what I do. So just do double dividends, do covered calls, and watch more videos on the channel if you want. So catch you guys in the next one, and have a fantastic rest of your week.